Hi, it's Lee, and welcome to the Tesla Economist. I know Elon's Twitter crusade is hurting the stock price severely right now, and it may not be quite so easy to cope. On top of that, there is a string of strong rhetoric circulating about demand in China dropping, and although it's early days, I still thought we could try and get an idea of what sort of numbers we might expect for Q4. Perhaps it's needed for some investors to remind themselves that Tesla does have good times too, and that currently perception has been so warped, along with a disappointing Q2 and Q3. And although their disappointment can be explained, people either don't care or have forgotten and just focus on the low numbers. Now, I haven't done a thorough deliveries estimate yet, but production seems fairly solid this quarter, with no lockdowns or line upgrades, aside from alleged minor one for a week at the end of this month, which would have a minimal effect on deliveries anyway, if it's even true. And I think Tesla are pushing to get their deliveries out for the end of the year, despite what others think. There are signs of this with how Tesla are motivating consumers to take orders from inventory with discounts and incentives. Elon said Q4 will be epic, so I think that's what he wants. Now, admittedly, these delivery pushes will come at a cost and will affect margins slightly. For example, the cars sold in the US with the $3,750 discount could affect margins for those cars as much as 5%. But that's just the vehicles from inventory, and just for the US, and just for December. Either way, I think 450,000 deliveries could be a possibility for the quarter. I know I may be somewhat alone in this estimate, and seems a lot more bullish than most who seem to be around 420 to 430, but we have about 250,000 cars produced from just Shanghai, and perhaps another 150,000 from Fremont. Then two other factories likely producing around another 50 to 60,000 cars. So we're up to about 460,000 or so, and I'm suggesting 450,000 of those delivered. Yet about another 30,000 from inventory or that missed delivery in Q3. I guess these other estimates are coming from people who are winding down demand. Perhaps they expect Shanghai might not deliver all their vehicles in China as there isn't enough demand. However, supposedly, we're not seeing many exports in December from China either. So what would be the point of not exporting them if they didn't have the demand in China? Yet China achieved record deliveries last month, and December is the best month of the year for deliveries. I believe this is the reason these other estimates are much lower. They don't seem to be expecting enough demand for China to meet production in Shanghai. Also, last quarter, when there were 22,000 fewer vehicles delivered than produced, there were certain hedge fund managers claiming that 15,000 of these were in China due to demand dropping. It turned out that it was only 5,000 in China that hadn't met their deliveries. It was not to do with demand, meaning there were around 15,000 or so in the US that had not been delivered, that were produced because they were not pushed out with premium delivery costs. I guess now we've mentioned it, it's going to be a very telling deliveries number this quarter, especially when we get the CPCA data of how many domestic sales there were in China. It's possible these other analysts are right, and Tesla are just going to make 80,000 vehicles in China in December, perhaps export 10,000 of them, and sell 30,000, and be left with 40,000 in inventory. Perhaps because they delivered so many domestically in China last month already to meet demand. But is that likely? Is that clever? Is there a point? If exports are limited by the number of Teslas they can fit on ships, then wouldn't it make sense to export more in December, even if they don't reach their customers in the month, as they wouldn't if they were left in Chinese inventory anyway? At least exporting them means they can at least go to where there is some demand, if there isn't enough in China. So there is evidence to the contrary of what these more bearish analyst estimates are saying too. It doesn't sound like good business to me, and I think of Tesla as a company that is good at business. And like I said, it sounds like Elon wants his epic Q4 and wants to get close to hitting his 50,000 year-over-year growth. Right, so back to that hard time as an investor when nothing much has happened. Well, this Q4 has changed all that. Even if only 430,000 are even delivered, it still appears likely that Tesla managed to increase their production to around 470,000 capacity. And that's total for the quarter. Obviously, Texas and Berlin are at a faster run rate at the end of the quarter than they are at the start. But a reminder that last quarter, Tesla delivered only 344,000. And I'm suggesting this quarter deliveries could be up around 30% higher than that. 30% increase in sales quarter over quarter during a recession, or whatever you want to call it. high interest rates, supply chain issues, China COVID lockdowns, etc. Okay, admittedly somehow BYD seem to also be ramping up impressively too, but their profits aren't going to jump. Right, what would be the difference in profit between a Q3 with 344,000 deliveries in a quarter and Q4 with 30% more delivered? The operating expenses are going to be about the same for both quarters. Therefore, we would wonder what gross margin Tesla are able to achieve in Q4. Last quarter, I made estimates for gross margins that were far too bullish, but I did manage to get within under 1% of the ASP. I think for my initial estimates closer to the date, I will do a similar ASP strategy. However, the US dollar has weakened a little since then, meaning that ASPs could be a little higher. On top of that, a lot of the ramping will come from Texas and Berlin, which sell the higher priced long-range Model Y. Although a lot of the ramping is also from the much lower priced made in China models. But the Texas and Berlin factories' margins would have increased dramatically from last quarter. And I think that is generally what was sucking out a lot of the margins last quarter. Also, there may have been some deflation in the economy. We're seeing commodity prices drop and oil, which could in turn lower costs for Tesla. Also, that line upgrade we had in Shanghai meant we lost a few weeks of production from the Model 3 and Model Y factories, along with all the costs associated with the line upgrade. These were not shown in operating expenses. They came under cost of goods sold. This was similar to when they upgraded the Model S line, and we were told on an earnings call that something like $120 million was spent on the line upgrade that went into cost of goods sold. I'm not sure how much of this line upgrade would have cost though, whether more or less than that, but either way, it affected margins in China. Right, the line upgrade that increased production by almost 30%. What happens when you upgrade your lines and start making 30% more cars from the same factory and floor space more efficiently? Your cost per vehicle reduces too. Thus, Tesla's costs in China should have reduced from this upgrade and increased margin. Although they may have passed on these cost savings to the consumer in order to increase demand enough to match the new supply of the additional units produced from the factory. I'm of the belief that people have lost perspective of Tesla, and there are reasons as to why. They've also put themselves in an echo chamber of doubt and reinforced each other's biases. Credible and authoritative bulls going along with the narrative. Some wanting to appear more credible and avoiding sounding like a delusional fanboy or hyperbull. Some are even fund managers and simply need to convey the appearance that they are acting conservative, or responsible, maybe a better word, as they're dealing with other people's money, and have lost them a fortune so far this year. So the best they can do now is act as if they do care and are being responsible, rather than making hopeful claims that everything will be all right this quarter. They address the negativity and adapt to it, and say, yes, demand in China will be down, so sales will be down, etc. They don't do all the numbers and try and debunk the FUD, or offer alternative possibilities. And it makes no difference to them, really, unless they start losing clients. Anyway, I think from here, I will try and work out a rough idea of what we might expect for earnings in Q4 with a 30% increase in deliveries, increase in gross margin, possible increase in ASPs, and how much will this result in an increase in operating profit? I think that's what matters. I'll do a video trying to estimate this, along with a rough idea of how much Tesla may release in deferred revenue. Let me know if there's anything else I've missed that we might expect in Q4 earnings. I think there's a possibility that if deliveries increase by 30%, then operating profits might increase as high as 50%. I think we should do some numbers and work this out, as the market seems to have forgotten that Q2 and Q3 suffered for various reasons, and Q4 has ramped up significantly too. 2 quarters being pulled down relative to another quarter now being pushed up, hence why we may see a large contrast in earnings. We had $3.29 billion in net profit in Q3. Therefore, I think $5 billion might be about what to expect, excluding deferred revenue. This is $20 billion annualized, which unbelievably equates to a PE ratio of just 25. If you include $1 billion for deferred revenue, then it's a PE ratio of 20. I wouldn't have expected Tesla to have a PE of 20 until it's a mature company. But these are the numbers. Anyway, I'll do a rough forecast soon to see how accurate these numbers really are. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.